Good morning, everyone, and welcome to the European crossover webinar. And we're certainly seeing the euro dollar continue to go and hug the lows here, and the dollar index continuing inversely to go on and hold right up at its highs. And like I said, I'm even a bit surprised here how the dollar, if from the beginning of the week, to think that we'd still be holding up here at these levels. Quite a bit of a surprise. Wow, look at the cable. Now we've actually gone in with a 23 handle. I mean, it's just some of these moves are pretty surprising, and to a certain extent, you think also with the dollar yen, because you think as well as the dollar's holding up or pushed up here, you think the dollar yen probably would have been up closer to about 875. So interesting that the dollar yen's only here at 826. Also, still holding up relatively well. We've seen gold. Now I see here gold with it 1404. Now that's with the XAU spot, and I covered that yesterday. If you're with us on the go back in here. If you're with us on the daily wrap up, and I reference this trend line, and it's, hey, look, we break below that, we're really going to potential to really work lower. And we certainly have worked lower. Like I said, I felt in the chat room yesterday, I came in a little bit early, but right around this 1410 area. Like I said, I trade in the futures, but I use the spot here. It's just the same thing, basically. Just one price is different from the other, but they're trading the same. So I hit that 1410. I thought, hey, look, this market feels heavy. We're going to go in and break them. Came in a little bit early, and the market really did its best to really hang on. But we did go in and break, and it was interesting to see when Powell came on board. We raced right on up there, and we turned around and gently overall started to slide right back down the hill. And here we are, right down here, barely hanging on to 1404. My take on this was, let me go move this here. As I mentioned yesterday on the daily roundup, I don't even use 4-hour charts. I use them with my I'm looking at the bonds, or in this case, like I said, and usually it's for a better perspective. Same thing here with the gold spot. I don't even look for that. It's just that it was far more clear to see the trend line here. And I think that if we do go in and break, we have the potential to go and move down here, which can be the mid 1380s. Okay, so I was just cautioning for those that want to step in ahead and buy just below 14. I'd be very careful, because, like I said, it's a pretty good little trend line here. We break, and to me, it looks like we've had multiple times to go higher. And I think we had some people that were just trapped into this area here from earlier on in the week. So to a certain extent, I'm surprised we didn't break even harder, but we are. I mean, this market's under pressure. So if you're trying to buy just below 14, be very careful here. I'm not saying we can't bounce up a little bit. And certainly we have the thinking that the Fed's going to be cutting rates, and that's what gold has been moving on. Gold, I've been saying it for a long, long time. Remember this when I was trading this more actively at the beginning of the year, into the year, and beginning of the year. A lot of reasons why gold could have rallied, and it's a great alternative to equities that are overpriced at the time. And look how where equities are now. The dollar this, and gold will move around a little bit based on a couple of things, but never. It wasn't until the thought that the Fed was going to be cutting rates that gold took off like a scalded dog. And now, even though the data's come in somewhat better, and still the Fed's telling you, hey, we're going to cut rates. We're going to cut rates. I think Stelios was saying yesterday that Powell's Trump's lapdog or something like that. Anyway, so my point being is that now it's like, okay, it's a done deal. They're going to cut. They're going to go and cut. They may only cut 25 basis points, but they're going to go and cut. Gold's like, okay, like just yawning. You know what I mean? So to me, that opens the door for us to break lower and probably come down here and challenge potentially, if nothing, only just to spook the stops. Why I'm cautioning, be careful to try and grab this thing after it's tried here and here and here. Now it just can easily just slide here and hit those stops. Maybe we'll hang around and hold their own and but that's probably going to be after we break right through here. We'll see what happens. Just want to go on words of caution there. And let's go back into that main screen chart. Europe a bit rebounding just a little bit here. Look at the dollar just paring back just a hair. We did see some notes over here. ECB surge talking about inflation. We're going to jump into that real quick for the screen. Although that headline I saw was out before we even came on. So ECB surge says underlying inflation expected to increase over the medium term, supported by our monetary policy measures, the outgoing economic expansion, and stronger wage growth. ECB surge says risks surrounding the euro area growth outlook continue to be tilted to the downside. Says that this reflects the ongoing weakness in the international trade and environment of prolonged global uncertainties, which are weighing on particular on the manufacturing sector. Eurozone's economy and data survey information pointing to somewhat weaker growth in the second and third quarters of the year. Oh, okay. Sarah says the banking union to be completed, in particular, a fully fledged European debt insurance scheme is a key missing element. She says at a time of heightened global uncertainty and completing the euro's area's architecture is also necessary for the Europe to be able to achieve its other objectives. And says, looking ahead, the governing council is determined to act in case of adverse contingencies and also stands ready to adjust all of its instruments as approved by the as appropriate to ensure that inflation continues to move towards the governing council. Okie dokie. Let's go move back into the main screen. Okay, and let's see, let's go and move into, get into the news quickly. Okay, the G7 finance ministers meeting today in the French city of Chantilly. Whatever, I'm not interested in that. Don't need the French meeting host. Let me see, triggered a U.S. investigation, new tariff Soviet song. That's no real news. UK inflation fell back to the Bank of England's 2% target in May, and some economists think June data due this morning will show it dipped further as retailers cut prices to win over cautious consumers. If true, the augurs darkly for overall demand for the economy and will add to the gloomy emerging from business where successive surveys point to a weakness, awareness about making further investments with Brexit uncertainties abounding. Hang on, I was just going to go to the data. Hang on. Okay, we have that coming up. I'll go over that. Okay, von der Leyen, EC president. Okay, whatever. With eyes drifting to a meeting of G7 finance chiefs in France later today, world markets are caught in a quandary of betting on U.S. and other central banks easing while incoming economic soundings are beating forecasts. The stock market mood has been weighed down by Trump's continued somber rattling over trade with China and his insistence on Tuesday that higher tariffs on more than $300 billion of Chinese goods were still possible. Wall Street indices ended lower overnight, and Asia's major markets followed suit earlier today. Despite the trade row, impressive U.S. retail sales readings for June, and even above forecast manufacturing gains added to similarly surprising strength from Chinese retail and industrial sectors earlier in the week, and painted a more benign picture of the world economy at mid-year than many had bet on. However, interest rate future markets have stuck doggedly to their expectations of a quarter-point Fed cut later this month. And that's what I was saying in relation to the gold, was that, it's pretty much like, okay, it's going to happen, blah, blah, blah. And gold is just like, maybe not that you expect the gold to move a whole lot higher and had the potential earlier this week to move a whole lot higher, but you'd expect to be maybe, holding up in the mid-teens or trying to push a little bit higher, and we're just sliding back. So you got to be careful with that. Fed Chair Jerome's Powell speech late yesterday did little to dissuade that, and that's my point. And Chicago Fed President Charles Evans said on Tuesday he felt cuts of 50 basis points may be warranted by the end of the year, though not necessarily in July. Markets are still pending in cuts totaling 75 basis points, while 10-year Treasury yields have held around 2.11% over recent sessions. At least part of the dollar's renewed strength against the majors is coming from sterling's weakness on highlighted concern about the no-deal Brexit as UK leadership contest nears an end. Both candidates, Boris Johnson and Jeremy Hunt, now appear willing to contemplate a no-deal exit around Halloween, even though the newly confirmed Commission President Ursula von der Leyen said on Tuesday she would be willing to accept another extension beyond, beyond October 31st deadline. Oh my God, we're going to go into another year probably. Despite upbeat wage data for May, economic numbers showed slowing momentum in UK job creation, and the whole picture conspired to send the pound around 124 for the first time in more than 2 years, with sterling also falling to its lowest level in 6 months against the euro. The pound continued to weaken first thing on Wednesday and hit the low of 23.80, its weakest since April 10th of 2017. UK inflation numbers for June are due out later. Euro-dollar was also under pressure, partly from Brexit concerns, and dipped below 112 first thing. G7 finance ministers later on Wednesday will also be watched less so for some agreement on world currencies and for further U.S. complaints about what it sees as Europe, China, and Japan's competitive devaluations against the dollar. There may be some agreement on a collective response to cryptocurrencies and Facebook's plans to issue its Libra stablecoin. Let's take a look here. Let's see. There we go. Let's see here. And dollar firm on upbeat, U.S. data, pound, and euro on the back foot. The dollar stood firm on Wednesday after upbeat U.S. data further tempered expectations of an aggressive policy easing on the Federal Reserve later this month. The struggling pound and euro also provide additional impetus to the U.S. economy. The dollar rose after stronger than expected June retail sales. Data dampened expectations that the Fed cut interest rates by 50 basis points rather than 25 basis points at its end of month policy. The strong U.S. data is a key driver behind the dollar's latest gains, but weakness in European countries, notably the pound and the euro, is also playing a significant role as well, said Junichi Ishikawa. The pound retreated to a 27-month low, 23.96 overnight as Boris Johnson and Jeremy Hunt, the two candidates, vie to outgun each other on taking on a hard Brexit. Losses came after a survey by the Zoo, and it's referencing the euro, showed that the mood among German investors deteriorated more sharply than expected in July, amid the prolonged trade dispute between the China and U.S. dollar, which touched low at 108.17 yen after advancing 0.3 against yen overnight on strong U.S. retail sales. The Aussie dollar was near flat at 70.07, following comments by Trump. The U.S. has a long way to go to conclude a trade deal with China, but could impose tariffs on an additional $300 billion with the Chinese if it needed to go, said Trump. The U.S.-China trade route is now at the center of the market's attention. Oh, my God. They've been saying this since Moses crossed the desert. It's been the center of the market attention. Probably dealing with the next year, and they're still saying it's the center of the market's attention. Focuses on the Fed's policy, U.S. data, and their impact on yields, said Ishikawa. Fed Chair Jerome Powell, speaking in Paris on Tuesday, reiterated a pledge to act as appropriate to keep the U.S. economy humming. And Evans, meanwhile, said on Tuesday that an interest rate cut of a 0.5 percentage point at the U.S. Central Bank's policy meeting could speed up achieving the Fed's inflation goal. And you see, even with all that talk, gold's still, sliding further south. A Fed rate cut has been a foregone conclusion, but there appears to be no consensus, not only in the markets, but within the Fed itself, of how many times rates would be lowered at the direction of the U.S. economy, said Makoto Noji, chief of currency strategist at Nikko Securities. With that, we'll go on and move into the bias chart. Well, what can you say about the euro? Mm-mm-mm. I mentioned this yesterday, and we'll go over it again. Last week when we were able to get back about this recapture this 1262, I thought, wow, this is great. But folks, we need to get above that 1285. Well, I thought that was just like, I wouldn't call it a minor hurdle, but I thought, okay, this is like, one stop on the way to, potentially challenging up to 1326. Heck, this 1285 has been like a lid on this market like nobody's business. And we've turned around, rotated lower. And yesterday, I was making a point in the chat room. I said, they're asking about the euro. Well, people making a couple of comments. I myself was saying, boy, it's sick as a dog. And someone was saying, mentioned about this euro holding and moving higher. And I'm like, you know what? We may hold, but we're not going to move higher, at least not for today, which was yesterday. So I said, look, the people that are long now, and I mentioned this yesterday on the daily roundup, Kid Jukes, strategy out of Societe Generale, was saying, man, with everything that's gone on for the euro in its, benefit, was the Fed going to cut rates, and there was a few other things he had mentioned. He goes, we need to get above 114, not 113. We need to get above 114 within the next week or two, or what else is it going to do? And folks, it doesn't look good here. I mean, it does not look good. But if you think about it, look how far we've rallied up here and we rolled off. So as things turned around and it looked like the dollar was going to slide, not that we're maybe going to be right back up here at this top, but at least you would have expected us to come up here to this 1326. You see what I'm saying? I mean, at least maybe rally up to 50% of this. Man, this thing has barely just popped its head up a little bit and just fallen right back down. Okay, so it doesn't look good at this point. We're kind of holding here, but when we're looking at support, it points right back down here at this 1180. Now we might hold here and try and work higher, but where's your downside support or bias chart support is going to be here at 1180. At least you got to know where your risks are. Just a moment. And resistance. Right now it's going to be there. $12.63. It would take a dramatic turnaround for us to make up to 1285. 1285, that's only the stuff that bulls could dream about at this point. That's how sickly this thing is going now. Once again, the dollar has gone far more than I would have thought. So it doesn't mean you're trying, make a stab down here and work hard. But as far as 1285, that's not happening today unless we see something dramatic. Okay, so 12, so you can almost move it to 1247, but that's only like 30 pips away. So I don't want to go overboard. It'd be right here at 1263. I mean, if someone was long the euro, we rallied up to 1263, they'd be happy to jump out of this thing right here. Let's go move into the cable. Well, we had 24 yesterday. Boy, that was just, that held the market at the time, actually down to the pip. Just a lucky call, so to speak. But we're certainly pressing lower again. And I'm just going to keep it simple and say that's the support for today, right there at those lows. This cable is something else. Let me say that, something else. Um, so we'll just say right there, support is going to be 2383. I'll just call it 2382. And let's take a look as far as resistance. You have to allow for this thing to pop back up. I mean, one could make the case it's right there at 2450. And maybe it is. Well, probably actually about right here. That's how pitiful this thing is at. I mean, that's a decent shortcut. We'll be right back there. So we're going to, right there, 2479. 2479. Boy, who would have thunk it? Other than Amanda. She's about the only one who thought we'd fall this far. I haven't done anything in the cable in about 2 weeks or maybe a little bit longer. Sheesh, man, I'm thinking like about the time I come in and short it right up in your face. But boy, this thing is really sick as a dog. Although then again, so is the euro, which was what I was saying yesterday, was the euro being sick as a dog. Let's go and take a look at the Aussie. The few times I've been trading the cable, I've kind of gotten lucky. I tell you what, I've never been very good at trading cable. But I remember the last few times I've gone, but they've just been little day trades or scalp trades. But moving on to the Aussie. We're still hanging around here. The resistance is going to come in right there, right across this little top right there. You see that? 70, 40. That's going to be our resistance. I mean, obviously this 70-27 is huge, but we're dancing on either side of it, so to speak. So it'll be 70 there, 70-40. Good. And let's go into the daily, intraday, I should say. I still like this for a pullback down here. Now we'll see with the dollar. You know, I'm surprised the Aussies hold up very well. You know, maybe we're starting to turn to a deaf ear with Trump and his things about I'll raise tariffs. Although that part I believe he just keeps on. I mean, you know, suggesting he'll go on ahead with the $300 billion with more tariffs of China goods. But this is where I think we can go to once again is that's not going to change. It's 69.82. 81 there. So that's going to stay the same. Let's move into the Kiwi. Oh, getting ready to come up to that UK data. So hang on a moment. Let's get the other page because that'll have us where we can see the different so looking at Kiwi. Boy, we are holding up very well here in Kiwi. So it's going to be the same to 67.39, maybe 67.40. Yeah, 39 here. And boy, it has held up, has remained stout. Let's go and take a look at the intraday. Boy, it was held up very, very well. Well, it's going to stay the same here, 66.80 here. That will be the same. We'll try and do CAD before we get to the UK data. We had our bias chart support here at 37. We had trouble there. You can see that. Not a whole lot, but we paired back. We reasserted ourselves. We made it up here to this 30.90. Got us besides 30.93, and then we've come back down. That's 77. Overall's held up. I mean, I thought there was a chance we could still go beyond that, but 30.77 has been a key marker. We got above it, but we slid right back below the 77. We'll stay with the 77. I don't see any reason to change it. I thought that, I mean, they could push a little bit higher beyond that, but we're back below 30.70, so there's no reason to change it. On the downside, we had that 29.95, but certainly we're a ways away from that at this point. So support would be looking here at 30.36. 30.36. I might be able to get in the peso. This is a bit of a surprise. We were able to push up and look where we're pressing this 1911. Blake was on face yesterday. He was talking about this 1 to 5, maybe even 1 to 6 risk reward, and that's played out well. And we're still pushing a little bit higher. And he was doing it off that long-term trend line. I was looking at these levels here saying, hey, we can still potentially push lower, but that long-term trend line is still holding up very, very well. We're just going to keep it simple right here. Resistance is going to be right there at 1916. And support is going to be right there at 19.0. I'll just call it 19.05. Let's go on to the UK data. So coming up, core CPI, I've got the cable here, the sterling versus the odd, and the guppy right here. See if we're getting ready to release that. Let's push this a little bit further out of the way. Let's see what kind of reaction we get here. Another 5 seconds. There we go. No, not a whole lot of reaction. Flat, and core CPI. Cable relatively quiet. Sterling odd, not really a whole lot. I mean, after these huge moves we've seen, we talked about this yesterday here on the sterling versus the odd. When we look at it on a daily, the disparity between the exponential moving averages on the daily, not the 2 hour. Yeah, Amanda's like with the Z's, the snores. Yeah, that UK data has been just that, the snores. Nothing here on this data here. CPI, PPI, nothing, as in nada. Top of the hour, we do have HICP. Oh, that's final. And coming into the States, building permits sets at 8:30 Eastern, and housing starts. Canadian CPI, 8:30, and that's it. So it's going to be a relatively quiet day. We do have Aussie full-time Aussie employment this evening, and tomorrow we do have retail sales out of the UK. Let's move this out of the way. Okay, let's go into the dollar yen. Well, I think it'd be easier just to focus right here on this 2 hour chart. And you think about where the dollar index is now, you'd have thought the dollar yen would be much higher. So it's holding up very well. We had 832, and that 832 is really working like a ceiling on this thing. At this point, the 832 is going to work like a pivot, so to speak. We're going to go on and keep this 832 as it's been holding the market, but it's going to work like a pivot because if we can get above it, we push higher. But that dollar has been holding up very well, so it's going to take another push to get this thing to move higher. So, I mean, a more stalwart push by the dollar to get this dollar yen to push much higher here. Support. We're going to go and keep it still with the 778. And with that, we're going to move into the cash dollar index. I have been very, very surprised by the dollar index. The way it's been able to, after it lost it, it regained it, lost back below in here, and then to turn around and push back higher again. And this is on top of the Fed even saying basically, we know July's locked in for the rate cut. But I mean, even Fed Evans saying, hey, 50 basis points, that's going to be fine. Not necessarily this month, but yeah, he's comfortable with that. And the dollar's just still like, this is just, like I said, I'm surprised we've been able to hold up, and we'll continue to hold. In this case now, like we were talking about before in the euro, week, 2 weeks ago, it's more of a dollar story as opposed to being in the euro. Why it could move higher because the euro comprises 56%, 56.4% of cash dollar mix. At this point, I think this is more about the euro just being so weak that it's just going to keep the dollar bid up. Because the point being is that even with the interest rate, whatever, it's not like it's zooming here, but it's holding up like a champ. Let's go into the 2 hour chart for some resistance here. This is some good resistance at 45. We're just going to go with that 45 here for the resistance right there. Stay with that, and we'll see where we go from there. 97.45. I mean, as far as staying with it is just going with this level right here. I mean, it's already there, but that's a good level. It's been a level before. We'll just go with that. And on the downside, what downside? We're going to stay with 97, right there, 97.12 for the downside. Keeping it very, very tight. Now let's go move into the cross rates. Well, we know the Kiwis already been doing well. And boy, look at this thing. It's doing very, very well. Not only well, but very well. We've even gotten beyond here. Resistance is pretty clear. It's 72.83. Not rocket science, that's for sure. So 72.83. Well, let's just go here with this. I mean, it seems so close. You know, we'll go with 72.33. Well, we've been hugging the lows too in this euro yen. It's like 21.12. Right there. Called 21.17. I think he's going to try to make a little bit of a stand here. All the way up in here. I mean, if we do get some short covering here, you can make the case a little bit lower here, 21.68. Been pretty quiet. But this is that key upper level, so we'll go with 21.79. Moving on to the euro log. We had here, you see here, the euro has closed the week on the lows, opening to move to major support. Well, remember we said we weren't supposed to be major support there. It's supposed to be a support at 59.55. Initial support is a major level 59.92. Well, we've made it down here to the 59.55. There it is. So we're looking for right there, 59.55 since the beginning of the week. You see it more clearly on the daily. That's it. I think that should be it right there. Although, how that goes. I mean, this thing continues to make lower lows, but at least for now, right there. 59.60. This isn't going to be achieved overnight, but I think that this resistance is still going to be key there. 60.46 right there. I don't know why I've had that marked as bullish. It's the craziest thing. But you can see on the daily, there's that 59.55 that we're looking at since the beginning of the week. And the major at 59.92. We were looking for a downside move to 59.55. Man, has this been a payday for those that have been, and it's not my personality to hang on, but boy, I sure wish I could force it to be my personality. I think one of the guys in the room made a pretty good point. He said, he was telling one of the other gentlemen, he goes, or one of the guys was agreeing with someone saying, I think I will have a long-term account. Or, you just hang on, and then the other account is for the shorter-term trade. Because look at this. Holy smokes. Let's go into the Euro Kiwi. Boy, are we really pressing. Yeah, because of the strength of the Kiwi. Wow, we came right just to the 61%. We'll go with that. 66.80. It's going to be right here at 67.40, 67.42 for resistance. Let's move into the RCN. This just hasn't really done a whole lot. I mean, it finally moved a little bit higher. Remember, we had 76.19 and moved it down to 76.06. But man, remember when this thing used to move all over the place and great proxy for the trade and equities? And boy, those days have come and gone, or so it would seem. We'll stay with the 76.06, and that's no change. 76.06, bottom, what we have here was what? 75.63. Yeah, 64, no change there. I'll move into the guppy. We finally made it down to the 78%. This thing is still weakening. I'm just going to go with the big level, the 34. Looks like the bid as low as what, 33.99. Just go with that for 34. This thing has just been, these sterling pairs have been something else. But just going with that big fig, we've already taken out the 78%. We know that starting pairs love to go down to 78%. On the upside, we'll look there. Mm-mm-mm. 34.97. If we can get some kind of a little bit of short covering rally. Boy, these things recover due to short covering rally. Boy, will they go bananas. Can you imagine some kind of a Brexit deal or something? Boy, this sterling, you got to hang on. It will be like a freaking rocket ship. Not the expected, but I'm just saying. Yeah. And lastly, sterling versus the odd. Same thing here. How much further can you go and fall? We're actually holding here. The level we have here is 76.75 or 76.70. We'll go right there and see if we can hold on to that low right there for the day. 76.66. Boy, I gotta feel sorry for anybody that's been trying to hang on to these sterling pairs. Man, this is, I was gonna say the death of a thousand cuts. I don't know, I think a whole lot worse than that. Death of a thousand spikes. I mean, like it. On the upside, if there ever will be an upside, makes it wonder. 77, 76. That's a long, long ways, but that's where get some kind of just even barely a reasonable short covering value would take a sale. Well, there's a bias chart for today. Thanks for joining us here on the European crossover webinar, and I'll see you in the chat room a little bit later on.